Okay, welcome to Last Week with talktojosh.net. Last week in real estate. Let's talk about what went down last week in real estate. It was a busy week. A housing report came out with a study that said your mortgage payments are made up 21% of taxes and insurance. And I got to thinking, is that right? What's the real numbers? And I dug in to compare it to North Carolina. North Carolina is not quite as bad. North Carolina has low property taxes because we rely on things like sales tax and other methods. But North Carolina's property taxes and insurance, it is making up 15 to 18% of your mortgage payments. So be aware when you're looking online at prices. And by the way, they have been rising in North Carolina due to Helene. Honestly, I think that was a big driver. That 2024 September 27th, I believe 2024, there was a storm here that did a lot of damage. Okay, so why am I talking about this? Because I want you as a borrower to be very, very careful when you look at home payments online. There are lots of deceptive things. They're charging you points and not telling you about it. They are, they're not getting the taxes and insurance very accurate because these are nationwide companies and they're looking at things wrong. You say, Josh, well, wouldn't that be good for me? They're estimating it high. Not always. Sometimes they don't know about city taxes. Anyway, long story short, call a professional. Let's talk. Home buyer preferences are beginning to change again. I thought open floor plans would be the thing forever. I love my open floor plan. We took out 4 walls to make this massive living room, kitchen, dining room into one big room. And so we love that, but it is more energy efficient to go back to the more traditional layouts. And, you walk into those homes with the high cathedral ceilings. That's not very energy efficient either. So sometimes you want what you want. You want those high ceilings. You want the open floor plan, but be aware that they're not as energy efficient as more traditional standard ceiling heights and a little bit more, chopped up spaces. Okay. Rates briefly hit a 4-year low last week, and that caused app purchases, purchase applications to be up, and it was a good little moment. And then something else happened. Well, I'm talking about the thing I'm going to say next. The current labor data is very, very confusing. Different reports are having conflicting views, and so what are the labor reports like right now? We don't really honestly know. There's different reports out there, and so I just can't really tell you much about that today. What I can tell you is that on February the 28th, 2026, you can debate whether it's a war or not, but something happened that included bombing people, right? U.S. and Israel, they launched coordinated strikes. You say, Josh, what's this got to do with mortgage rates? Well, mortgage rates became very volatile immediately. Investors typically move money into U.S. Treasury bonds because they're safe assets. This can push mortgage rates down slightly. So what's going to happen? I don't know. Mortgage rates are kind of got this boom fear. So just watch out. If you are in a position where you're happy with your rate and you can lock, I would lock, because we don't know what's going to happen with all the war stuff going on. Reach out to me, talktojosh.net, 360 Hickory on YouTube, NEXA Lending. That's who we are. We're ready to help you. I've got a team here to help you get your mortgage done as efficiently and quickly as possible. Reach out anytime.